All right, hello everyone. I saw that January is Celebration of Life Month. Now when the topic of resiliency comes up, I know the first thing I think of are natural disasters. But when you really reflect on it, isn't resiliency about life and protecting it? Well, today's edition of Green Builder Media's Impact Series, Game Changers in Sustainability, is going to focus on resiliency. The White House recently released a report that explores ways we can enhance the resiliency of the built environment. The report is based on years of data collected by federal agencies, the insurance industry, and building science experts. And it identifies programs, policies, and practices that can help reduce losses, lower insurance rates, and increase the market value of homes and buildings. Oh yeah, and help protect lives. Now, Samantha Medlock, former senior advisor for the White House Office of Management and Budget, joins us to delve into the report's findings and offers insight into the enormous effort needed to enhance our country's resiliency. Before we start the presentation, I wanted to mention the sponsors of today's webinar. And those sponsors are Green Builder Sustainability Institute. The Green Builder Sustainability Institute is a world-class research and education organization that develops and deploys long-term strategies for a sustainable environment and economy. The Institute's mission is to create forward-thinking, intelligent living solutions for a sustainable future that addresses our changing climate and urgent environmental needs. And the Green Builder Coalition. The Green Builder Coalition is the national manager of the Water Efficiency Rating Score, the industry's first performance-based residential water efficiency program. For more information on the WERS program, please visit www.wers.us. And for more information on the coalition, please visit www.greenbuildercoalition.org. I'm Mike Collignan, Executive Director of the Green Builder Coalition and your host of the Impact Series. We're going to get into our discussion shortly, and when we do, I hope that you'll submit questions for our guest. To do so, simply use that box over there labeled questions. I'll review those and pose them to Samantha at the end of her presentation. Now, to share a little background on today's guest. As I mentioned, Samantha Medlock is the former Senior Advisor for Resilience in the White House Office of Management and Budget, coordinating across the Executive Office of the President and the Administration to reduce the risks and costs of disasters with an emphasis on strengthening standards, leveraging private capital, and prioritizing the needs of vulnerable populations. Ms. Medlock staffed the President's State, Local, and Tribal Leaders Task Force and launched the insurance partnership called for in the President's Climate Action Plan to reduce economic risk and drive resilience-based codes and standards. She also led the Council on Environmental Quality's work on Executive Order 13690 and the Federal Flood Risk Management Standard, the first update to U.S. flood policy in nearly 40 years. Ms. Medlock has more than 20 years of experience in land use and disaster law and has testified in Congress on flood risk, levee safety, and resilient recovery from disasters. She's provided expert testimony and authored amicus briefs on private property rights in the National Flood Insurance Program. Ms. Medlock is a recipient of the Army Commander's Award for Public Service in recognition of her service on the National Committee on Levee Safety, created by Congress after Hurricane Katrina. In addition to supporting U.S. domestic resilience policy and practice, Ms. Medlock has participated in numerous bi- and multilateral technical exchanges with such parties as the Dutch Ministry of Infrastructure and the Environment, the UK Environment Agency, and the United Nations International Strategy for Disaster Reduction. Ms. Medlock is a Juris Doctor graduate with honors of Vermont Law School, and she earned a Bachelor of Science, summa cum laude, from Texas Woman's University. Samantha, welcome to the Impact Series.
Thank you very much, Mike. I appreciate it. And it's an honor to get to speak with you all in my new capacity as a private citizen. Normally, I would provide you with an update on federal policy advancements in resilience and preparedness, and we will get to some of that. But today, I do speak as a former aide to the President, a former state and local government official, but as a practitioner, a taxpayer, and a member of my community. So a friendly disclaimer is in order. This presentation is neither intended to be, nor it may be taken as legal advice. For legal advice, consult with an attorney licensed to practice in your jurisdiction and demonstrating expertise in applicable subject matter. The views that I express today are my own, and unless expressly stated to the contrary, are not the opinion or position of the National Committee on Levee Safety, the Executive Office of the President, or the administration of the U.S. federal government. So with that friendly disclaimer, onward. To get us started, it's worth noting, though, that federal policy does provide well-established frameworks for resilience that can guide our discussions today. So for purposes of today's webinar, I will define resilience as the ability to prepare for and adapt to changing conditions and to withstand and recover rapidly from disruptions. And this includes the ability to withstand and recover from deliberate attacks, accidents, and naturally occurring threats and incidents. So I will be focusing my remarks on the business case for resilience and conclude with an action agenda for resilience policy and practice. As established in the National Climate Assessment, as well as numerous reports from the World Economic Forum and from across the administration, climate change has the potential to impact significantly on our communities, on our nation's economic prosperity, and even on our national security. 2016 is officially the new warmest year on record, edging out previous record holders 2015. This is according to the National Oceanic and Atmospheric Administration. In fact, 2016 was the third year in a row that global average surface temperature set a new record, and the fifth time that record has been broken since the start of the 21st century. With sea levels on the rise, the impacts of storms like Hurricane Sandy and Matthew are compounded, along with the costs of recovery and rebuilding. Longer wildfire seasons and higher temperatures are already intensifying wildfire risks, and the costs of fighting wildfires are soaring with that trend. Severe and extended drought affects our food security and water supplies, both abroad and here at home. And our military bases, in addition to facilities like NASA's Kennedy Space Center, are already battling eroding coastlines, extreme rainfall events, rising seas, and thawing permafrost. Since 1980, the U.S. sustained 203 weather and climate disasters where the overall damage costs reached or exceeded $1 billion. The cumulative costs for these more than 200 events exceed $1.1 trillion. The year 2016 was an unusual year as there were 15 weather and climate events with losses exceeding $1 billion across the United States. These events included drought, wildfire, 4 inland flood events, 8 severe storm events, and the tropical cyclone event. Cumulatively, these 15 events led to more than 130 fatalities and caused $46 billion in total direct costs. That makes 2016 total as the second highest annual in a number of U.S. billion-dollar disasters, behind the 16 events that occurred in 2011. In short, climate change is already costing taxpayers. But the costs that we are incurring today will be dwarfed by the costs that lie ahead. Without action, taxpayers will face hundreds of billions of dollars in additional costs every year by late in this century as the effects of climate change accumulate. Climate change will significantly increase the pressures on an already constrained federal budget. Over the next 80 years, floodplains that are mapped by the National Flood Insurance Program could expand by 40 to 45%. The number of flood insurance policies backed by the federal government could double, and the average loss per policy could nearly double, driving up premiums. Crop insurance premiums and the federal subsidies that allow farmers to pay those premiums could both increase by nearly half. Annual wildland fire suppression expenditures could triple. Illnesses related to poor air quality could prompt billions in additional federal health care spending each year. And the annual federal disaster relief spending related to hurricanes could also increase by tens of billions of dollars as we look at the increased frequency and severity of coastal storms, as well as the continued intensification of development in areas of risk to those storms. Unabated climate change is also projected to reduce annual global economic impact by as much as 4% by 2100. Now, if 4% doesn't sound like much to you, bear in mind that that represents hundreds of billions of dollars in lost annual revenue here in the U.S., federal revenue. Taken together, the total fiscal impact quantified just to date could represent as much as 15% of total federal discretionary spending by late century if discretionary spending grows commensurately with real GDP. So more work is necessary to build on our current understanding of the fiscal risks posed by climate change. Our best scientists and economists will need to help paint the full picture of the fiscal risks of climate change, including capturing additional areas of risk, such as national security, infrastructure, and public health impacts like the spread of infectious disease. This is why the White House prioritized efforts over the course of this administration to accurately measure the true costs of policies, like the continued occupation or reoccupation of risky places, from floodplains and storm surge zones to the wildland-urban interface affected by wildfire. The National Institute of Building Sciences 2005 Mitigation Saves study is the most widely cited work on the benefit of investments in hazard mitigation, finding that every dollar that FEMA invested in hazard mitigation realized nearly a $4 public benefit. But this work does date from 2005, and it only looks at FEMA's hazard mitigation spending. So it does not account for broader investments of resilience occurring across the federal government, as well as private sector investments in resilience. This work is now being updated and expanded through a partnership with the Federal Emergency Management Agency, the National Institute for Building Sciences, the International Codes Council, and the Insurance Institute for Business and Home Safety. This study will more broadly look not just at the costs of increasing resilience and reducing the costs and impacts of future disasters, but also the overall benefits of those investments. More information is available through the link that I provide, and I encourage folks on this call to monitor this work, but also read up on it and consider ways that you can be contributing to the body of knowledge and partnering with this partnership in conducting the study and helping to modernize the research and make the business case for resilience. This will contribute to more fully capturing the full range of benefits of resilience investments, from reduced disaster and insurance costs to preserving tax revenues, increases in market value, and even stabilizing community credit ratings. It's important to note, too, though, that the federal government has important roles to play in identifying and mitigating risk, but states, tribes, and local governments are the first and last line of defense on climate change and have been taking steps to mitigate and adapt. That's why President Obama stood up the State, Local, and Tribal Leaders Task Force on Climate Preparedness, a bipartisan team of 26 governors, mayors, tribal, and county leaders that advised the administration on what local leaders most need from the federal government to support their own leadership and innovation in climate adaptation in 3 key areas: providing new mapping and tools to inform community planning and disaster recovery, technical assistance to support local approaches that are tailored to local community capacities, local risk tolerance, and the approaches that communities are already considering to adapt to climate impacts and reduce the need for federal investment to support local government recovery, as well as modernizing federal programs to provide incentives to support local action through increased standards and reducing vulnerability to extreme weather and other effects of climate change. And the federal government has been activated to implement those recommendations, to develop new data and tools, deliver that technical assistance to communities, and modernize federal programs to provide those incentives. From the National Disaster Resilience Competition, leveraging a $1 billion federal investment to reduce future disaster costs, to the Resilience AmeriCorps program, providing much-needed technical support on the ground for vulnerable communities to address resilience planning and implementation, and laying the groundwork for a successful reauthorization of the National Flood Insurance Program. The administration has been committed to providing tools and incentives for communities to develop forward-looking strategies for building climate resilience. That also includes acting on the task force's recommendation to modernize approaches to flood risk. Consider this. Despite substantial investments by the federal government to reduce flood hazards and protect floodplains, annual losses continue to rise. This problem arises mainly from unwise land use practices. Because unwise floodplain development can lead to damage and degradation of human and other natural resources, it's simply a bad federal investment and should be avoided. This statement was made in 1977 and rings just as true today as it did then. Between 1980 and 2013, floods caused more than $260 billion in losses just in the United States. The risks from future floods are significant and growing, given expanded human development in coastal areas and floodplains, land use changes, and climate change. Flood risk professionals have long recognized that the so-called 100-year flood standard is not a safety standard and is not sufficient to protect life and property in most cases. More than 40% of flood losses occur outside the confines of this so-called 100-year floodplain. Although more than 20 states and thousands of local governments no longer rely exclusively on this 100-year floodplain to drive development decisions and have adopted margins of safety to account for larger floods, federal standards remained unchanged for nearly 40 years. This is why the Hurricane Sandy Rebuilding Task Force required that all Sandy-related rebuilding projects funded by the federal government meet a uniform flood risk reduction standard informed by the best science and best practices. This standard required use of best available data for elevation plus 1 foot. This is the first use of a federal freeboard recognizing that, just as many state and local governments have, this 100-year standard is not sufficient when investing public taxpayer dollars to assure resilient recovery for the long term. When the federal government is seeking to rebuild, why would we actively put people back in harm's way? So in the aftermath of Hurricane Sandy, federal agencies incorporated the best available science and data, including sea level rise projections and climate resilience, into project planning and design. And building on these immediate recovery efforts and to ensure that the nation is better prepared before disaster strikes, the administration issued the Flood Risk Management Standard and Executive Order 13690 to modernize the 1977 Executive Order 11988. This is with the goal of aligning federal standards and practice with what states, regions, and local governments are already doing. The national standard directs agencies to account for the latest scientific projections and adopt more resilient siting, design, and construction standards for all federally funded projects. So this new standard provides consistency informed by the practices of professional engineers and standards and codes bodies, including the American Society of Civil Engineers and the International Code Council. And it brings federal policy and practice into alignment with what state and local governments are already doing to reduce the risks and public costs of future flood disasters. So agencies are currently updating their rules and procedures to implement that flood standard. And I would emphasize for everyone on today's webinar, this will benefit from your insights. FEMA and HUD were the first out of the gate, as well as the Environmental Protection Agency in implementing approaches for water infrastructure finance. So FEMA and HUD's rules, this is the Housing and Urban Development Agency, as well as the Federal Emergency Management Agency, were the first to put proposed rules out for public comment for 90 days. Those public comment periods have closed, and FEMA and HUD are now adjudicating that input to prepare their final rules and procedures. As well, the Environmental Protection Agency issued regulations with regard to the financing of water infrastructure under an innovative program under the Water Infrastructure Finance and Improvement Act, or WIFIA. And now, the U.S. Army Corps of Engineers has issued a draft approach that they are taking public input on. So public input is available between now and January 30th. I provide a link there on the slide for you all to take a look at the Army Corps approach and weigh in with your comments and input. In short, the higher vertical flood elevation and corresponding horizontal floodplain required by the executive orders is not anticipated to alter the way that Army Corps goes about its Section 404 permitting and its regulatory program. So the Corps regulatory program will continue to evaluate applications by applying the area subject to the base flood, or that 100-year floodplain, as the relevant floodplain. This is for permitting purposes. Additionally, EO 11988, as amended, will not impact the emergency actions, including those conducted under Public Law 8499. And this is, by the way, in both instances, consistent with the way that Army Corps has been implementing 11988 over the course of a generation, and is consistent with the executive order, the flood risk management standard, and the implementing guidelines developed through interagency collaboration. However, new planning projects will also continue to be subject to the executive order, and current internal procedures for the decision-making process will be sought to align with the climate-informed science approach under the flood risk management standard. So those new planning projects would be using the expanded floodplain, and that would be part of the new procedures being developed. What I would emphasize, though, is Army Corps of Engineers has long incorporated use of climate-informed science as best available data in the design of world-class engineering projects for flood risk management. Lastly, Army Corps is looking at the subset of 408 permission requests that may be impacted by the flood risk management standard. So they're taking comment on Section 408 permits and may be clarifying in the future guidance how the flood risk management standard may apply to the Section 408 permit program. I would also be watching for other federal agencies and departments in the new year and under the new administration to go about modernizing their procedures as well. Since the executive order and the flood standard applies to flood projects as well as federally funded projects across the federal government. So this would include federally funded projects under the Department of Transportation, under SBA's Disaster Recovery Program, under EPA's State Revolving Loan Program, as well as other federally funded projects across the federal government. So I encourage you all to reach out to your federal partners and offer your ideas on implementation to ensure that programs not only reduce federal disaster costs, but also help you succeed at the state and local level in your efforts to build resistance and resilience to flood. And when draft rules are issued for public comment, I really encourage you all to weigh in and help shape successful policies and programs to support your resilience efforts on the ground. Additionally, FEMA is advancing ideas toward a disaster deductible. Comments on that effort are due April 12th. Increasing community resilience and preparedness requires adjustments to federal programs and practices that have not always provided state and local leaders with the incentives that they need to craft sustainable and resilient communities. Some communities continue to roll the dice with everyone else's money, and if their luck runs out, they anticipate federal disaster assistance that they believe will make them whole. But careful study of the national debates around federal disaster relief reveals an important shift toward questions of whether some of the harms communities suffer may actually be self-inflicted wounds. It took 90 days for the Congress to approve a $60 billion disaster relief package for Sandy. Taxpayer advocates and other fiscal conservatives are asking, why is it the responsibility of taxpayers across the nation to rebuild communities if they haven't used best available data to inform their land use and rebuilding decisions? Instead, there is a drive to rebuild stronger after a disaster and to ensure that recipients of public assistance are committed to being responsible stewards of that public investment of taxpayer dollars. So in response to calls from members of Congress, the Government Accountability Office, and the Department of Homeland Security Office of the Inspector General over the last several years, FEMA is working to reform the way the federal government supports states following disasters. The agency is actively exploring the concept of a deductible, specifically leveraging the public assistance program. Individual assistance programs, such as direct aid to households after a disaster, would remain unchanged. But a public assistance deductible concept would provide incentives for mitigation investments, promote risk-informed decision-making, and help build resilience. So as communities work to increase their resilience to disaster, they reduce the cost of future events for both the states and federal government. A deliberate effort to reduce risk at all levels of government will enhance disaster response and post-disaster recovery capabilities nationwide. So FEMA has committed to a transparent stakeholder engagement effort to explore how the program might move forward. Last year, FEMA sought public comments on the basic concept of a disaster deductible. After considering the comments received, FEMA has developed a conceptual model framework that's now available for public comment until April 12th. So again, I encourage you all to go to the Federal Register and review this. There are a couple of things that are provided there for you to take a look. Additionally, private sector leaders recognize that extreme weather and other effects of climate change pose potentially existential threats to the long-term viability of regional economies and key commercial sectors. Local leaders also called for collaboration with the financial sector, particularly insurers, and that collaboration is focused on three key areas where there's strong alignment between the public and private sectors: in increasing the sharing of data and information, in promoting resilience-based codes and standards, and also to develop innovative approaches to financing resilience for homes and businesses and infrastructure that increases community insurability. The gap between total catastrophe losses and those covered by insurance has been growing. In the 1980s, it stood in the low tens of billions of dollars, but in recent years, it's grown to more than $75 billion. And only a fraction of potential economic losses due to catastrophic events are insured. This burdens the public with the responsibility of covering these extreme and unsustainable costs. And worse, without clear incentives to mitigate against natural disasters, society risks greater injury and loss of life. And global insured losses continue to rise, driven by a mix of factors, including economic development, population growth, a higher concentration of people and assets, including infrastructure, in exposed areas, such as densely populated coastal or riverine flood-prone areas, and a shift in the frequency and severity of extreme weather events. The insurance industry continues to have record amounts of capital to put to work, and the formation of the Insurance Development Forum provides a good opportunity for insurers to partner with the World Bank and the United Nations to demonstrate the value of insurance protection in building economic resilience. Over the last several years, the White House has been collaborating with insurance leaders, hosting a roundtable meeting on climate resilience and insurance 2 years ago, convening senior federal officials and insurance industry leaders to discuss how to mitigate increasing economic consequences of extreme weather and other climate-related risks. And since then, the administration has coordinated collaborative domestic efforts in partnership with insurance and finance leaders on strategic objectives to increase community resilience and insurability. These partners' efforts help to produce joint statements across the industry on public and private resilience initiatives, executive actions like the flood risk management standard to strengthen the security of federal buildings and assets and improve their resilience to floods, as well as wildfires and earthquakes. A new framework developed by FEMA on community resilience indicators, as well as work of the National Institute of Standards and Technology to put forward community resilience planning guides and other strategies to encourage the adoption of enhanced building codes and standards, such as communication through the Veterans Administration, the U.S. Department of Agriculture, and Housing and Urban Development, communicating directly to stakeholders the value and opportunities to adopt standards that exceed those of model building codes, such as those promulgated through the Insurance Institute for Business and Home Safety with the Fortified standard, and leveraged through the My Strong Home effort to capture future reductions in insurance cost and provide front-end financing for investments in resilience. Additionally, the U.S. Geologic Survey is launching a new streamflow information public-private partnership to support real-time conditions monitoring and the sustained collection of data to uncover hydrologic trends. And in addition to their work on the disaster deductible incentive, FEMA is pursuing reinsurance opportunities to diversify its approaches to manage the financial consequences of catastrophic floods, and developing a new cooperative research and development agreement with reinsurance, insurance, catastrophe modeling leaders, and academia to increase the sharing of data, modeling software, and development of robust analytics products to support flood risk. The White House Office of Management and Budget just released a new report on standards and finance to support community resilience. This is a culmination of a collaboration with leaders in reinsurance, catastrophe modelers, and building science to advance community resilience and insurability. And that report serves as a capstone of 3 years of collaboration, presenting findings and ideas and actions that can be undertaken to reduce disaster costs and strengthen insurability and market performance, to retrofit for resilience through savings-based finance, enabling and accelerating resilience, announcing advancements in data collection and assessment, as well as showcasing state, local, and private sector innovation. Additionally, insurance leaders have announced their commitments focused on particularly important assets, including homes, schools, hospitals, water infrastructure, and the commercial sector. For example, IBHS, the Insurance Institute for Business and Home Safety, announced that in 2017, they will be developing Fortified for commercial application to support resilient design and retrofits for both new and existing small and mid-sized commercial structures, including retail and public buildings, to help fortify these structures from hurricane, high wind, and hail events. Additionally, Swiss Re will offer up to a total of $2 billion of financial risk capacity to U.S. public entities over the next 5 years. This includes entities within the federal government, the K-12 public school systems, municipalities, counties, states, and owners and operators of critical infrastructure assets, such as utilities and state-sponsored risk insurance pools. The North Carolina Insurance Underwriting Association announced a new 6-month pilot beginning this month, where policyholders in territories comprising the Outer Banks and the Barrier Islands of North Carolina will receive an endorsement on their homeowner's policy, where if they suffer a covered loss that damages their roof more than 50%, the policyholder can upgrade their roof to the IBHS Bronze Fortified level at no cost to the policyholder. FM Global, over the coming year, will conduct on-site risk assessments and provide risk improvement recommendations for approximately 4,500 schools, hospitals, and transportation-related facilities, advising the owners of those facilities about federal programs that can assist them in securing favorable federal loans for improving their resilience. And Munich Re has committed to new research in 2017 on the costs and benefits of approaches to siting, building, and maintaining manufactured home structures to reduce the damage done to those homes in coastal and inland wind events, leveraging preliminary research that suggests that potential reduction in property damage and insurance losses could be as much as 50% through the use of more resilient standards known as Zone 3 standards in all new manufactured homes. These announcements show how public and private collaboration is yielding better climate risk identification, adaptation, and resilience practices, and positioning these corporate partners for success over the long term, as well as their clients and stakeholders. Through this sustained commitment from government and private sector leaders, the places where we live, work, and gather will better withstand the more frequent and intense weather events and other impacts of climate change that are already underway and those that can no longer be avoided. So as noted, climate change has the potential to shape the social and economic contours of this century. And without sustained action to identify risk, inform public investments, and unlock private capital, future generations will pay the price and look back on us all with regard to our choices to act. So we have an obligation to invest wisely for the next generation, and it starts by ensuring our communities are more resilient and prepared for the effects of climate change. Every year through America's Prepare-a-thon, in April 30th and the entire month of September, a campaign is operated at the grassroots level to promote opportunities for individuals, families, and businesses to take action to increase resilience, making it local. So messages around, for example, having a family plan and assembling supplies for families, including your pets, to self-sustain for at least 72 hours, confirming adequate insurance coverage and documenting all belongings, and important messages to employers to assess preparedness for the company, for facilities, and for the workforce are a part of these annual campaigns. What I would emphasize for employers is important statistics that 40% of businesses do not reopen after a disaster, and another 25% fail within 1 year. More than 90% of businesses fail within 2 years after being struck by a disaster. This is why it's important for employers to assess their risk and take action to improve preparedness, including the preparedness of your workforce. So, opportunities for action are available. In closing, I would note that everyone's voice matters. Over the course of my career, I had the opportunity to prepare public comment for multiple stakeholders and employers, but it was not until I worked for the White House that I really understood firsthand the value, the importance of every single one of those public and stakeholder and professional comments that come into these processes. Public comments matter a lot. So voice your concerns and help policymakers get it right. But also, where you see a good approach coming through a proposed rule, reinforce that good policy or approach with your comments as well. So take a look at opportunities to comment now, underscore where the proposed approach gets it right, and provide that input to help reform and revise the final product so that it lands in a good place. 2017 will present important opportunities to support resilience in federal policies, including through implementation of the flood risk management standards across the federal government, as well as FEMA's disaster deductible incentives to the states that will reward states that have adopted resilience-based building codes and standards, and establishing state-level hazard mitigation and disaster recovery policies, and promoting the use of approaches that increase community insurability to reduce dependence on federal disaster assistance. Additionally, watch for opportunities to engage in the reauthorization of the National Flood Insurance Program, to promote opportunities for mapping, including future conditions, addressing affordability of flood insurance for low to moderate income policyholders, and addressing risks associated with levees and dams. Additionally, take that local action. Visit ready.gov and follow hashtag NATLPrep to participate in America's Preparathon and help build momentum to sustain this campaign for April 30th and National Preparedness Month in September 2017. In conclusion, the last 4 years have seen unprecedented advancements in resilience policy and practice. There's no reason this trend can't continue. Private sector leaders understand the business case, and state and local governments are already acting. We don't know yet what the incoming administration will do. They may not yet know what policies they will prioritize for community development and the built environment. But without question, the incoming administration will benefit from the sustained involvement and engagement with everyone participating in this webinar. It's encouraging to see the focus on the nation's infrastructure, but it's not yet clear how appropriators in Congress will respond and how the incoming team will pay for their announced priorities. But the voices assembled here are powerful. So I challenge you all to put forward your action on sustainability and resilience, to weigh in with your comments, and to prepare to help the incoming team succeed and to follow through. With that, I will conclude and turn it over to you all for discussion and questions and answers.
Thank you very much, Samantha. And like I had sent to all of you, go ahead and get your questions in via the questions box. We do have only until the top of the hour, so I will get to as many of your questions as possible. Samantha, I know we talked about this a little bit yesterday in our conversation, but I want to kind of bring this out to give you the chance to make your comment on this. Alex Wilson, highly esteemed in our industry, started the Resilient Design Institute, I think about 5 years ago. He wants to know if you have a sense of how the incoming administration is thinking about addressing resilience. Have there been any kind of indications? I know that you, Samantha, there's certain things you can and you cannot talk about, so if you could just give us a sense of where you think things might be headed within the parameters of what you can and can't talk about.
Sure, that's a great question, isn't it? I think with every passing day, as the principals, the members of the incoming president's cabinet and the incoming teams get assembled, as they move through confirmation, and as the agenda and priorities of the incoming administration get announced, we will all get a more clear sense of what the president-elect and the incoming team will seek to achieve in their first 100 days and over the course of their administration. What I would emphasize is that along with the incoming team, there is the cadre of professional career federal folks across the administration that are continuing in, just as we do through every transition, the course of the business of the federal government. So for example, this includes managing the ongoing disasters. Even today, we see flood events unfolding in the Gulf Coast region and around Houston. California continues to struggle. We have ongoing disaster recovery efforts continuing in and around North Carolina, in and around Baton Rouge. So I would first emphasize that the need for continued engagement and to sustain the recovery and response operations that are underway will be an important consideration that the incoming team will be grappling with on their very first day and have already gotten great briefings on through the course of transition. So I don't want to get out ahead of what the president-elect or the incoming cabinet and the incoming administration would want to make their priorities. So I don't want to get any more specific than I have. I would just emphasize that the opportunities to continue the smart and fiscally conservative initiatives that are already underway, I think can expect to have traction, and so that's where I think it's important for folks to engage. The only other insight is what we have all already seen with regard to a focus on infrastructure. But again, beyond that, I wouldn't want to get any more specific than I have.
Okay. I had a question for you. Very early in your presentation, you mentioned the phrase deliberate attacks. How much overlap is there between the Department of Homeland Security and whether it be OMB or any of the other agencies? I guess put another way, how much interagency cooperation is there when it comes to resiliency?
Sure, a tremendous amount of interagency cooperation. In fact, that's been a real hallmark of the evolution of federal policy and practice over the course of the last 8 to 10 years, including the announcements and implementation of presidential policy directives. I mentioned those at the top of the presentation with Presidential Policy Directive 8 and Presidential Policy Directive 21 that define resilience. Over the course of the federal response and recovery efforts to Hurricane Sandy, those presidential policy directives were exercised for the first time and demonstrated a significant amount of improved coordination across the departments and agencies, including the Department of Homeland Security, as well as important departments and agencies that feature very prominently in disaster response and recovery in the short term, as well as sustained recovery efforts over the long term. I would underscore an interagency body in particular that is a product of those presidential policy directives, the Mitigation Framework Leadership Group. This is an interagency team that's been operating with extraordinary success for several years under the leadership of FEMA, but with active participation at a very good level across the full range of departments and agencies that are engaged in hazard mitigation. And while certainly the incoming administration will want to take a look at those policies and those interagency approaches and bodies, again, I think there's every reason to expect that or something very much like that to continue, because it has been so successful. And there's a recognition that it makes best use of federal taxpayer dollars. It eases human misery on the ground, but it also properly leverages state and local authority. So in short, I would say that the cooperation across the agencies is robust and would be expected to continue in hazard mitigation. Similarly, there's the Recovery Support Federal Leadership Group that coordinates disaster response and recovery on the ground. So again, those sorts of bodies I think would be expected to continue. They may have a different name, but this will be an important function that I would be confident the incoming team would want to continue in some form.
Gotcha. Another question for you. The National Flood Insurance Program has been in the red for a few years, right? I mean, they've had some financial struggles. If you were being sworn in on Friday, and this is kind of a fun exercise, if you were being sworn in on Friday, how would you propose fixing the National Flood Insurance Program?
Wow. Well, that I think is the subject for a whole other webinar and perhaps a week-long seminar. You know, if it were easy and straightforward and as simple as a glib, you know, kind of 1 or 2 bullet answer that I could give on this call, I can assure you it would have been done long before now. Having said that, there are some specific opportunities that are very important with this particular reauthorization cycle. The National Flood Insurance Program would expire under its current authorization in September of 2017. So again, there's certainly every reason to expect that the Congress will reauthorize it, and we'll need solid input to do that successfully. There are what I do consider to be the grand challenges of the National Flood Insurance Program. And in short, the the program needs to find ways to address the affordability of flood insurance, particularly for lower and moderate income families and small businesses. So there needs to be a way to differentiate between those for whom more actuarially sound premiums are perhaps undesired and perhaps inconvenient. I am a flood insurance policyholder. I pay that premium, and it's not free. But it's a worthwhile investment to have peace of mind and to know that my single largest investment, being my home, is going to be protected in the event of a flood. And so there are those for whom more actuarially sound premiums may be undesired, but then there are those for whom it is truly a hardship. And in order to address affordability, there will need to be those distinctions so that support can be provided for lower to moderate income families and property owners, for renters, and for small business to be able to afford the insurance that they need while being aware of the true nature of their risk. So addressing affordability is going to be absolutely essential. Additionally, there are ways that the flood insurance program, working in concert with broader flood risk management policy, can continue the progress in addressing risks associated with the nation's levees. That is an incomplete journey. There are many lessons that we have learned through the experience of the 2005 hurricane season and the levee failures associated with Hurricane Katrina. But that journey is incomplete, and there are opportunities for the flood insurance program through its reauthorization to continue that progress. And then finally, it's very important for the flood insurance program to continue and even build upon robust mapping that has served the nation very well. It is some of the smartest federal money that's been invested to produce flood insurance rate maps that state and local governments and the private sector rely on, as well as programs across the federal government rely on to inform siting and decisions. But those maps are compared to going down the highway at 65 miles an hour looking in the rearview mirror because they do not take future conditions into account yet. This is where it'll be important for the flood insurance program to be able to continue its robust mapping work, but taking those future conditions into account, since after all, it is informing the siting and design of homes and infrastructure and public buildings that we expect to be there in 40 years, 80 years, or 100 years. So maps need to be able to inform designs that will account for conditions on the ground over the lifetime of the project. Those are, I think, are the three big challenges. But through advancements in data and analysis, through economic analyses and policy innovations, I'm confident that the reinsurance program, the flood insurance program can be reauthorized in a successful way, while also taking advantage of partnerships with the private sector, such as through reinsurance.
Awesome. Thank you for that wonderful answer. I want to get to a question from Julie and give a plug to Julie's organization, the IBHS. They've been doing some great stuff for years. The Fortified for Home program has been around for a while. It's my personal hope that they are able to expand that to other states and create better incentives through their members as well. But Julie has a question. Can you talk a little bit more about the federal government and what they might be able to do to incentivize resilience through federal programs and agencies that touch on home mortgages? And I think you touched on it a little bit just with your answer before, but if there's anything else.
Certainly. And I did touch on this a little bit earlier, but I'm so glad that Julie asked this question because it gives me a chance to dive into it a little more deeply. What's important to note is that currently and properly, federal programs are designed with the benefit cost analysis informing programs on the ground. So it, for example, under a HUD program or the Veterans Administration or USDA, the Department of Agriculture. Those are big departments and agencies that do quite a bit of mortgage work, either through direct lending or guaranteed loans. But those programs are designed with analyses of the costs and benefits of the policy and the program. Currently, those analyses may not fully capture the full range of benefits of, for example, a stronger roof, or stronger doors and windows, or designs and materials that better withstand wildfire risk or better withstand seismic risk. Through more information that is technical data about the performance of different designs and materials, about the reductions in risk that can be realized through siting away from floodplains or siting away from steep slopes subject to erosion, but in some, better accounting for the risks and benefits of more resilient design and material to the structure or the asset, we can make better federal underwriting decisions. So this is where data and information are very important, and I believe that we are very close to having more robust data sets coming into those analyses that can better inform federal programs and practices. In fact, at a meeting that was hosted at the White House in December, assembling leaders in insurance, reinsurance, building science, including the Insurance Institute for Business and Home Safety. Julie was there, so she heard us make this challenge that over the course of the coming year for analyses and building science, to put forward data and information to better inform federal underwriting and prioritization. So this is also why the work of the National Institute for Building Science to advance the Mitigation Saves study is so important. I hope that's a helpful answer. There's a lot that can be done across different programs, and we could get into specific programs in, Fannie and Freddie or the VA or USDA. But across the board, this is really about having more data come into play to inform federal underwriting and mortgage across the board.
All right, Samantha, we've got 3 questions. I don't know if we've got the time to get to all of them, though. The one that I think might have a short answer here is from Nicole. She wants to know if cyber attacks fall under resiliency, or is it just natural disasters that are under resiliency?
That's a very short answer. So the current presidential policy directives define resilience and resiliency certainly across the full range of threats and hazards. So this includes natural hazards as well as anthropogenic ones without question. This includes cyber risk and cyber crime. We did not get into that in this webinar. Again, that's a whole other topic that's terribly important, but without question it comes into play, as well as insurance mechanisms for addressing those risks.
Okay. We also have a question from Sheridan. Are there parallel efforts addressing other sorts of resiliency issues such as drought and earthquake, whether they be natural or from fracking?
So there are executive actions that have been announced to address risks associated with drought as well as seismic risk. In the short time we have left, I would not get into the broader topic of the link to fracking.
Right. And finally, the final question we got is from Ryan over at IMT. He wants to know what role do building codes play in improving the resilience of buildings? Are there above code programs for resilience as there are for energy efficiency?
Certainly. So in the course of my work at the White House, if I was in 10 meetings a day, building codes was coming up in 9 of those 10 meetings. It is absolutely critical, and yet so much of the authority for this really rests at the state and local government level. So this is where the opportunities to look at federal programs and practices to provide incentives for state, local, and tribal adoption of robust codes and standards is so important. This is why you see it featured prominently in FEMA's disaster deductible design and that incentive out for public comment now. Without question, there are advanced codes or enhanced codes approaches that have great traction in state and local government, statute, and in practice, and that are being recognized by insurers through reduced insurance premiums and costs. For example, of course, the Insurance Institute for Business and Home Safety Fortified program. And there are others that are out there, but I would say at this stage, IBHS Fortified probably has the most traction in practice and in statute. But there are others that are out there that we can expect to emerge. So one example, of course, is the community rating system under the National Flood Insurance Program. That is certainly an above code approach that has great traction too.
Well, thank you very much. It sounds to me like we could have you on here 3 more times to talk about 3 subsets of this very large and very important topic. So certainly appreciate your time and talking with us today, Samantha. We really do appreciate it.
Thank you. It's been a privilege.
Also wanted to take one more opportunity to thank our sponsors, Green Builder Sustainability Institute and the Green Builder Coalition. And thank you to our audience for joining us today and sending in your questions. We really do appreciate it. And this is the reason why we do it, is to help you and to connect with you. We hope you'll join us for our next webinar on Wednesday, February 22nd at 2 p.m. Eastern Time. It'll be a special presentation from Bosch titled Building Smarter Cities and Communities. Hey, maybe we'll touch on resiliency. Until then, take care, everyone, and have a wonderful day.